Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very beautiful end of the week of trading. And in today's markets, guys, well, we had a nice little bit of recovery after the disaster that happened across big tech names yesterday, which led to the SPY and the QQQ coming down a lot. And today was a nice day of recovery, but not only that, guys, the market was very, very broad once again. Yesterday, despite yesterday's big sell-off in big tech, we had 400 names that were up on the S&P 500 and about 100 that were down. The market was very, very broad. It's just that we were getting dragged down by a few very big names. I'm very happy to say, guys, that today was much the same. Big tech with a nice little recovery today, but the rest of the market is where the true performance was. So in today's video, guys, we're going to take a look at a few things. Number one, I have one earnings prepared for you guys, and that is part of the banking earnings that were released early this morning. We are going to cover JP Morgan's earnings. Thereafter, guys, we're going to go through our major technical analysis rundown in terms of our major indexes right here, and then our big tech names, and see whether or not the recovery is doing quite well. And lastly, guys, we're going to take a look at my portfolio to see any new trades that was made today and how I am preparing for next week. So without further ado, guys, let's get right into today's video. So SPY up a nice 0.63% and QQQ up a nice 0.59% as well. But here is what we want to focus on, guys. The rotation within the market once again today was an extremely broad-based rally. Everything pretty much rallying to the upside. Yes, the banks had a little bit of a hiccup for their earnings. Their earnings were quite good, actually. We'll take a look at JP Morgan, as I said. The Visa and MasterCard trade is finally starting to recover a little bit too. Semiconductors, nice recovery. Big tech, still a little bit muted. Apple and Tesla did have some gains, but Meta, Google, Amazon, and Microsoft down for a little bit. Consumer discretionary and defensives, guys, were doing very, very well across the board, and really everything doing quite well too. Take a look at your one-day relative, guys. Everything pretty much in the green, except for communication services. Communication services led to the downside by Google and Meta for the most part, but all in all, guys, very nice broad market performance. Everything pretty much in the green. On the 1 week relative as well, guys, you can see the market is painting a much better picture than it was just a few short weeks ago. Very, very broad based rally. Once again, the only declines on a 1 week basis, once again attributed to Google and Meta's slight decline. Now, in terms of the 1 month, guys, we are finally fully positive on the market right here. And even your 3 month shows that the market is really doing a good job of broadening out. Moving on to the amount of names that were up versus down, 503 names in the S&P 500 today. The amount of components that were up, 403, and 99 were down. Very nice broad-based rally, guys, and I'll bring this indicator up again. We take a look at this whenever we have concerns about concentration or we're looking to see if the markets are broadening out. Here is your percentage of stocks above the 50-day moving average, where you can see that we just now hit a high, similar to the high that we had back in May and earlier on in the year in March. Just goes to show now 63% of stocks are now above their 50-day moving average, which was not the case just a few short days ago when only 40% of stocks were above their 50-day. So the market definitely doing a great job of broadening out. You can even see that on the 200-day moving average chart, percentage of stocks above their 200-day moving average. We were pretty much at the 50% mark for the last couple of weeks, and now in only 2 days of trading, we're now back to the May highs and the highs of pretty much the rally when it started January through March. So looking very good, guys. The market is finally starting to broaden out, and the rally is finally starting to manifest in more sectors than only big tech and semiconductors. Very good things. So before we get into more technical analysis, guys, let's jump and take a look at some JP Morgan earnings, shall we? So all of major banks, well, not all of them, but a lot of major banks did report earnings this morning, the biggest of which is JP Morgan. So they will be the sole focus of our analysis because most of the banks were saying the same thing, arguably the same thing that they've been saying for the last couple of quarters, as a matter of fact. So take a look at JP Morgan here, guys. They were down pretty much only about 1.21% on the day. They did have a big dip on the morning, coming down about 3% after their earnings, but did a good job recovering pretty much intraday thereafter. So what exactly happened? We'll take a look at their earnings, guys. Had a very nice beat on their EPS by about 4% and a tremendous beat on their revenue by about 21% on revenue. Fantastic amount of revenue. However, this is a slight little anomaly, and we're going to get into that when we go through their numbers. So let's get into it right away, shall we? Now, take a look at JP Morgan. JP Morgan chased top second quarter revenue expectations on strong investment banking, doing a very good job, guys. So just reminding you what the banks have been saying for the past couple of quarters. Their wealth management and client divisions have been performing very, very well. Their investment banking divisions have been performing very, very well too. The only thing that's been a point of concern for analysts and institutions alike has been their net interest income. The difference between the amount of money that they loan out versus the money that they have to pay out on deposits for some things like high yield savings accounts or stuff like that, right? Net interest income, because interest rates have been very high, has been very weak. And the logic is as follows, guys. If you're not too familiar with net interest income, let's just break it down in a very, very easy way to understand, right? So this is obviously the main source of revenue for any financial institution, guys. They make all of their money on loans outstanding. Now, we have to remember this thing, right? So what can the bank do is they will borrow at, let's say, the federal funds borrowing rate, right? So this is the Federal Reserve 1 or 2 year treasury right now at about 5.5% that they can borrow. This is called the overnight rate. So they can borrow money at 5.5%, and then they will lend that money at 7% and pay deposits. So if you have a high yield savings account with the bank, you notice they say, hey, if you deposit your money here, we'll pay you 5%. So they will borrow at 5.5% and they'll pay slightly under that. So they're making money on both of these things. They're borrowing at 5.5, they are lending at a premium. So they are pocketing a 1.5% spread on every single loan that they do. Thereafter, they pocket more money when they pay you on deposits, right? So obviously they can afford to pay out more all the way up to their borrowing cost, but they will only pay you 4.55%. So they will pocket the difference between that amount as well. So that is how the bank makes their money. However, the reason that net interest income has been low are the following reasons, right? When interest rates are high, well, the demand for loans here, the amount of money that they can lend at 7% is obviously reduced because interest rates are high, not that many people qualify anymore, and there's just not tremendous demand for loans when the price of a loan is relatively high. Second, demand for deposit yields are high. So there's a number of people putting money in savings accounts because they pay 5%. So unfortunately, the bank is making less here where they have most of the spread, and they have to pay a lot more at this rate right here, at which they have the lowest amount of spread, right? So they're getting kind of hit on two fronts in terms of that, which is why their net interest income has been overall down. And obviously, analysts and institutions look at how much is this number growing to gauge the health of the bank as a whole. So hopefully that makes sense. Let's continue in the article. So JP Morgan Chase on Friday posted second quarter profit and revenue that topped analyst expectations as investment banking fees surged 52% from a year earlier. Obviously, with the markets having a tremendous rally since November, obviously they're collecting a lot more fees and a lot more revenues. A lot more clients are willing to invest their money with JP Morgan. Now, revenue rose 20% to $51 billion, topping the consensus estimate. Very good. CEO Jamie Dimon noted in the release that his firm was wary of potential future risks, including higher than expected inflation and interest rates. Jamie Dimon has been having a very cautious tone for the past year at this point, so really no change there. He'd rather be on the safer side of things. Now, so here is what CEO Jamie Dimon had to say, right? The veteran of the banking industry. The geopolitical situation remains complex and potentially the most dangerous since World War II, though its outcome and effect on the global economy remain unknown. There has been some progress bringing inflation down, but there are still multiple inflationary forces in front of us: large fiscal deficits, infrastructure needs, restructuring of trade, and remilitarization of the world. So talking about a lot of different macro aspects here is Jamie Dimon, which is very normal as the CEO of arguably one of the largest institutions in the world. He has to be focused on risk management, right? He can't give that bullish of a tone. He always has to be a little bit defensive, guys. It's pretty much just posturing at this point. Now, a rebound in Wall Street activity, especially on the advisory side, was expected to aid banks this quarter, and JP Morgan's results bear that out. Keep in mind, as I said, guys, client management fees have been going up, deposits have been going up, investment banking fees have been going up as well. So all those divisions of the bank have been performing excessively well. Now, JP Morgan reaped $2.3 billion in investment banking fees, exceeding the street account estimate by roughly $300 million. So they beat across every single metric except for net interest income, which is why the bank had a little bit of a tumble today. Equities trading revenue jumped 21% to $3 billion, topping the estimate by $230 million on strong derivatives results. Fixed income trading, bond trading, jumped 5% to $4.8 billion. So their trading desk, both on equities and bonds, is doing a fantastic job of bringing in money to the bank as well. but the bank had a 3.05 billion provision for credit losses in the quarter, exceeding the 2.78 billion estimate, which indicated that it expects more borrowers will default in the future. This is a testament to pretty much the consumer being on a little bit of shaky legs right now in terms of their ability to repay back loans. So the bank is putting more money aside in the event that people potentially default. Now, a rise in charge-offs and moves to build loan loss reserves in the quarter was driven by the firm's massive credit card business. So they're just playing it safe. Still, while banking and equities trading boosted results, we see Main Street banking beginning to sputter. Main Street is consumer-facing banking, right, for you and I. Provisions for credit losses were up significantly, as we just said, showing us that JP Morgan is expecting to see a rough patch in the US economy for the average consumer. JP Morgan CFO Jeremy Barnum told reporters Friday during a call that overall he saw quite a healthy consumer, despite some weakness in the lower income segment. About half of the increase in card reserves was tied to rising balances, targeting those lower income consumers, of course, right? The overall picture on charge-offs is consistent with the story of normalization rather than deterioration at this point. Yes, the economy is slowing, but it seems to be on trend for a very much of a soft landing. So there you go, guys. Once again, bank executives potentially calling for a soft landing. However, what I wanted to point out for JP Morgan, guys, we're not going to go through this financial statement because I feel that if I start going through a lot of these ratios and capital requirement ratios, I may lose quite a number of you. The one important thing that we have to look out for, guys, is are all of their divisions performing quite well? Yes, consumer and community banking, you can see net income of 4.2 billion was actually down 21% year over year. That was due to rising expenses. The only thing there, just because of the credit costs that they had to put aside pretty much for those loan provisions, right? Credit costs, credit card, and loan loss provisions. So that is why their net income was down a little bit on that. But overall, guys, not too bad. Average loans up 10% year over year. Average deposits down 7% year over year. Active mobile customers up 7%, debit and credit card sales volume up 7%, and client investment assets, this is a big one, up 14% year over year, flat quarter over quarter, however. Very decent for their consumer and community banking division. Now, here's the commercial and investment banking division, which is really carrying them up higher. Net income of 5.9 billion, up 11% year over year. So that just goes to offset some of this net income negative performance from the consumer and community banking, where they had to put more loan provision loss money aside, which kind of ruined their net income a little bit. All of this was very decent. Now, in terms of the asset and wealth management, so their money management and investment services, right? Net income up 1.3 billion, up 3% year over year. Very, very good for them. Average loans of 224 billion, up 2% year over year, and average deposits of 227 billion, up 7% year over year. All in all, very decent quarter for the bank. Nothing bad to see here whatsoever, guys. And they did come in line with expected guidance for the remainder of the year. So really nothing noteworthy to see here, guys. JP Morgan is such an extremely solid bank. If you want to take a look at the financials here, guys, it's such a robust balance sheet. Take a look at their balance sheet, guys. Net loans outstanding, only 1.3 trillion, and total deposits on hand, 2.4 trillion. Such a wide buffer in the event that they have a little bit of problems with their loans. So the banks this time, guys, no 2008 session, no 2008 repeat at all is possible, in my opinion. The banks are way, way, way too well capitalized this time around. That being said, let's get into a little bit of valuation for JP Morgan because they are very close to the all-time highs. So revenue growth, it is a very, very value-oriented stock. Do not expect to see double-digit growth in revenue and EPS. All we can hope for, guys, is the bottom line. Are they expanding bottom line profit margins or not? And JP Morgan, this most recent quarter, it's not here yet, but they have been expanding profit margins, all while their largest stream of income has been down. That is very, very good for the bank. Now, 2024 forward PE ratio at 205 is about 11.84. Their historical average PE for the last 10 years is about an 11.61. So the stock right now is really trading in line with fair value. And when you take a look at analyst estimates, guys, analyst estimates say roughly the same. Yes, there's a few people up here with very, very bullish targets at around 243, but the midpoint average right here is about 215. So that's why I say, guys, the bank is trading roughly in line with expectations. Not too much at a discount, not too much at a premium either. So that being said, guys, JP Morgan on a technical basis is looking quite strong, right? Gorgeous monthly trend expansion right here, and expecting them to just continue to deliver strong results. Gorgeous weekly uptrend as well. Could just be looking for maybe a little bit of a weekly higher low. If ever this earnings weakness takes us down I'd be surprised, but if ever we take us down into these lower levels right here, maybe a little bit of a swing trade to be had at the 12 EMA. This is right below 200 for that potential trend continuation on JP Morgan. Extremely solid company is JP Morgan, 2.22% dividend, and they do a number of buybacks on their stock and obviously pay that dividend very, very nicely. So nothing bad to say about JP Morgan, but is it a deal? Not really right now, but if you're holding JP Morgan, I really don't see any red flags or any reason to sell the stock whatsoever. Fundamentals are great and momentum is favoring the bulls right now. Longer term timeframes and even short to medium term timeframes, weekly and daily, are still in full bull control. So that's pretty much everything we had for JP Morgan right there. Hopefully you guys enjoyed that. And for more earnings, guys, we're going to have so many earnings next week. It's going to be a booming week, in my humble opinion. More banks on Monday, Goldman Sachs, BlackRock coming in before the open right here. Then on Tuesday, Bank of America. We also have a few brokers here, right? Morgan Stanley, Interactive Brokers, Charles Schwab, State Street. So many more banks are coming next week. And then on Wednesday and Thursday, we get into some big ones, guys. ASML, Johnson & Johnson, right? Ally Financial, which is a big Warren Buffett stock. Obviously, everybody knows that. Thursday, TSMC and Netflix. Huge day for them. Domino's Pizza in there. A few of the home builders, right? DR Horton. Going to be such a big day on Friday as well. American Express. So I will be playing probably a lot of these earnings next week. Looking forward to it. Another earnings season that we're going to get into. So with that being said, guys, we're going to go right into our technical analysis and we will see that not much has changed. So what we were on the lookout yesterday, guys, was were we going to lose the hourly time frame into an hourly downtrend after such a big move down? Can the bears confirm the hourly downtrend and go for daily consolidation? Unfortunately for them, they were not able to. The bulls saying, you know what? Let's just run this one higher today. So as of now, still very, very healthy. This is pretty much our last hour candle of the day. This is the after hour, so we won't count them. As of now, still just looking for maybe the hourly higher low and maybe continuation of the trend. If we do set that hourly downtrend in motion and come and break these lows right here, that is when you know, okay, we're in for a little bit more daily consolidation. But the bulls have tons of space, guys. Anything above 542.60, just looking for a daily higher low for further trend continuation. Looking pretty healthy on the S&P 500, especially due to the fact that we're extremely broad right now. On the weekly, you can see as well, gorgeous continuation of the trend. Weekly candle doesn't show any major red flags whatsoever. So even if we were to have a little bit more of an extended pullback right here, daily downtrend, just know there's tons of space on the weekly. Anything above 518, looking for that weekly higher low for the continuation of the weekly uptrend. Looking very solid. Great recovery by the bulls today. Obviously, one day is not meant to say that we're ready for new all-time highs, but just in preparation, guys, if we do get a little bit further sell-off into earnings next week, at least you guys know we have tons and tons of space for the weekly bulls. Moving on to the QQQs right now, same analysis does apply. So gorgeous daily uptrend right now, looking for the daily higher low. And as we're getting this reversal of the hourly time frame, if we set a new hourly time frame in motion, breaking today's high, hourly uptrend is resumed and your daily uptrend continuation just resumes as well. This will be your new daily higher low. So next Monday is extremely important, whether or not we get hourly downtrend or the hourly uptrend continuation, to determine whether or not this is the daily higher low or whether or not we may just be due for a little bit more. If ever the markets do want a little bit more to the downside, just know that anything above 476, looking for the daily higher low for further trend continuation. Keep an eye. This is your first line of defense right here. Prior resistance should be newfound support, and we're just sitting on the 12 EMA right now. So juicy little spot for the bulls to gain a little bit more momentum and maybe try to smash these all-time highs once more. On the weekly, looking very good as well with this weekly candle close. Yes, a little bit of a red week for the QQQs, but I don't really see any major red flags. And even if we do pull back on the weekly, guys, maybe a couple bad weeks of earnings or something like that, right? Keep an eye on this level right here. This is your most recent higher low, 443. Anything above that, going to be looking for a weekly higher low for furtherance of the trend. Now, moving on to financials. Financials having a very, very decent day today. And a lot of that, oh no, I just closed the tab. Well, a lot of that was due to your banking sector, or rather the credit card issuers coming back, right? Visa and MasterCard having very, very strong days. And the banks, for the most part, didn't fall off too much, right? Yes, a few of them were negative on the day, but not too much. Continued outperformance in financials, looking very, very good. Making attempt at the all-time highs already, 42.50, and we're pretty much already there. So nice daily uptrend by the bulls. Looking for, as soon as this move is topped out, looking for a daily higher low. At that point, anything above 41.32, gonna be looking for that daily higher low for the further trend continuation. This level right here, guys, is gonna be the one to watch for the breakout, retest, and maybe run. Talking about 41.65, 12 EMA is right there. All this previous resistance gonna be newfound support and the moving averages. So maybe a little bit of a touch and run for your XLF looking very good on the weekly as well. After a weekly downtrend, the bulls now trying to reverse this weekly. So one of two things may happen. Either we have to set the weekly higher low right away and two-step the recovery, or we just blast through the all-time highs, sit on them, and then reset the weekly uptrend to the upside. But I see no red flags on the daily or weekly for your XLF bulls. Moving on to healthcare right now. Healthcare also having a decent day, 0.62% to the upside. And look at this engulfing move by healthcare, right? Daily downtrend and then one single big engulfing move over 100%. And even coming now above and setting a new all-time high today. Very, very nice. That was one of the best scenarios that I was potentially envisioning for healthcare, is trying to come above this previous all-time high level of resistance, then maybe use it as support, the breakout retest, and then run. That could be a very, very juicy trade in the near-term future. A lot of prior resistance is now under us as support at the 147 level, and the moving averages are curling up into this location as well. So as soon as this move tops out, guys, looking for a daily higher low for a new daily uptrend to be set by your XLV bulls, looking very strong. And the reason why we had such a bullish penchant on this is because we never lost the weekly, guys, never lost this weekly trend, looking very good. Now finally getting that third leg of weekly trend expansion, closing pretty much above our previous all-time high levels. So it's looking very, very strong for some continuation into next week. Once again, one of my favorite names that's still relatively at a relatively decent level is AbbVie, right? AbbVie still a decent amount away from the all-time highs. I first started talking about this one when we were down here, and it has proven to be a nice trade, looking to regain that hourly up or daily uptrend rather, and looking to set this weekly uptrend back in motion. So watch out for AbbVie. Moving on to SMH now. Semiconductors having a little bit of a recovery today. Very decent day for them overall. Now, in the context of a juicy daily uptrend right now, still hunting for the daily higher low. Same as SPY and QQQ, guys. Watch the hourly trend, right? Nice hourly uptrend right now. And we need to see if ever this just continues into the Monday session, or if ever we now, since we've come below, right? If we ever set the lower high into lower low, hourly downtrend is in motion, and daily consolidation may take a little bit more time. A lot of space though, anything above 256, just looking for that daily higher low for further trend continuation. This area, guys, is probably going to be a bit more solid, 264.39, right? For maybe a touch and run. But just keep in mind, guys, if we do come all the way back to there, the bears are going to be taking back a lot of that move. That's pretty much going to be about a 65% retracement, right? Which could lead us into one of two scenarios, either a tightening range leading into earnings, or if earnings are bad on ASML and TSMC, let's say, well, we could get a daily downtrend into motion, and then we will look to see whether or not the bulls can hold it up and protect these weekly higher lows at about 254.50, set up for a weekly higher low, and maybe move on to the furtherance of the uptrend. As of now, the bulls still look healthy, but we need to be very, very conscious about the price action on semiconductors over the next few days, especially leading into very large earnings like ASML and TSMC, which are two of your industry leaders, to say the least, right? So we have to listen. Are the growth prospects still there, or are they starting to say that growth is slowing down? It's going to be the key for every single one of the semiconductor earnings coming up shortly. Moving on to the Russell right now. Russell, absolute massive day again for the Russell, 1.17% to the upside. They were up a lot higher, but then retraced a little bit, guys. But now we are above something significant, right? This entire zone of prior support, which was resistance for a very, very long time, the 212, we are now above it, looking very, very good. Tremendous daily move by the bulls right now. So as soon as this move topped out, and I'll remind you, watch the hourly time frame. If we lose this into the Monday session, you guys will know that we are looking for the daily pullback, right? Anything pretty much above 200, going to be looking for the daily higher low for further trend continuation. Now, the 212 is one line, yes, but we do have a secondary line that we could pretty much put all the way right here, right? So it's kind of like a little bit of a range. So if we do pull back into this range, that is maybe where the bulls are looking to get the breakout, retest of the range, and run a little bit further. This is the location that if we pull back into it, I'm going to be trying for a swing trade on the Russell for that further trend continuation as the market broadens out and maybe the risk on trade becomes a little bit more favorable, as now markets are really pricing in the possibility of a soft landing. So now that they're doing that, the risk on trade may just finally get a little bit of legs. I will be using TNA to do this, which is the 3 times leveraged ETF on the Russell. Now, moving on to the Dow Jones, guys. Dow Jones breaking to a new all-time high today, looking extremely healthy. And we were saying when we broke out of this tightening range with a bullish lean, looking for that trend expansion all the way to the all-time highs. And they did it. So looking very, very solid here, guys. Daily uptrend nicely in motion. As soon as we pull back, pretty much anything above 39,100, going to be looking for that daily higher low for the furtherance of the daily uptrend. Keep an eye on this level right here. Could be a nice fallback zone. 39.6 down to about 39.3. A little bit of a breakout, retest, and maybe run back to the all-time highs in the event we don't just do this, right? That would also be another juicy trade. If ever we are able to really break and close above, that would be another breakout, retest of the all-time highs, and maybe run a bit further. Looking pretty good for the continuation of the trend expansion, in my humble opinion. In terms of the weekly, guys, no red flags at all. As a matter of fact, weekly uptrend now with the new all-time highs is perfectly back in motion. So the bulls with tons of space, even if we choose to consolidate a little bit more, let's say earnings are bad, the bulls have tons of space, anything above 38,000, just gonna be looking for a weekly higher low for furtherance of the uptrend. Looking very, very solid here, guys, as a whole, right? Now let's move on to our big tech names, shall we? So moving on to Apple with a nice little recovery here today, 1.31% to the upside. So once again, the bears' inability to set hourly downtrends is the one thing holding them back from being able to have a sustained multiple day rally or multiple sell-off to the down, multiple day sell-off to the downside, right? No hourly trend for the bears. They just cannot follow through. And now what happened overnight and into today's session, hourly recaptured by the bulls. So we will keep a close eye on that, guys. It's looking a little bit dicey here into the end of the day. So you can argue that they lost the hourly uptrend rate, hourly downtrend right here. So what we're going to do is look out for the continuation rather of this hourly downtrend into the Monday session. If we get that, it means that daily consolidation still has a chance to do some continuation to the downside, but the bulls have tons of space, guys. Anything above 210, just looking for that daily higher low for further trend continuation. I would not be surprised if big tech continues consolidating a little bit, right? Because they have been on such a monster rally, all of them pretty much over the past month and a half of trading. So if I am looking to make a little bit of a play on Apple, guys, it needs to be close to the 216 level, right? This prior area of resistance, which should be newfound support. The 26 EMA is coming all the way into there as well. So if we do have a little bit of a multi-day, multi-week pullback on Apple, I may be looking to get some bids in this location right here, as we'll just once again be looking for a weekly higher low for the trend continuation. Apple still looking so strong, guys. No red flags, just maybe looking for a little bit of a pullback. Once again, watch how this hourly trend evolves into the Monday and Tuesday session. Moving on to AMD, give me a quick second. So AMD looking pretty good, down 0.18%, still getting rejected here. The reason I say it looks good is because it's really doing a good job of holding these highs, right? So tried once again to break up into the 185, 186 level, but you can see it was a really challenging moment for AMD stock all the way since pretty much January through April, right? It's dealt with that area a number of times, and once again, it is proving to be a little bit challenging for the bulls to break above that. Keep an eye once again on your hourly trend. If for every which reason, guys, we break the low of today in the Monday session, hourly downtrend is underway, you will lose most of your major moving averages too, and we may just be due for a little bit of daily consolidation. That's okay. Daily uptrend is gorgeous right now. Any move lower at this point, anything above 154, just looking for that daily higher low for furtherance of the trend expansion. In my opinion, if we can't get it done, can't break above here right now, may just be due for a little bit of a pullback. And where will I be looking to shop for some AMD? This box right here, guys, 174 down to about 169 could be a juicy swing trade opportunity for the pullback and maybe make a second attempt at 185. And even on the weekly, guys, looking extremely bullish with that close. Any extended pullback on AMD into this level, we'll just be looking for a weekly higher low for the furtherance of the trend continuation. Keep an eye on AMD's product release over this coming month, right? They do have earnings Tuesday, the 30th of July. But as I've been showing on the channel for a while now, they are putting out their Ryzen 9000 series of CPU chips, which give the same performance as the top of the line Intel chips, but use half of the power. Their efficiency gains are extremely good. So watch out for that headline when it does come out. I think the markets will react very nicely to it. Moving on to Amazon right now. Amazon down about 0.29%, but that's okay here, guys. Amazon, one of your major big tech names that unfortunately has lost the daily uptrend, right? Daily uptrend was right here. Higher lows were right here, trying to go for it, and they lost it. So what we could be dealing with a little bit right now, guys, is if we continue maybe into a little bit of a daily downtrend into some weekly consolidation for Amazon, which appears to already be started, could be eyeing this level right here, guys, 189, 190 prior resistance. Going to be looking for that weekly higher low to come into play. 12 EMA is sitting right there as well. Breakout, retest, and run could be a juicy little swing trade opportunity for Amazon if ever you guys are interested in something like that, right? Stop losses go very tight down here below the lows. You're risking maybe $8-9, and then we're targeting to the upside pretty much like 210, 215 trend expansion at that point, right? So looking pretty good. No real big red flags for Amazon, just some nice little consolidation after pushing the new all-time highs. I see no red flags for this stock at all. As a matter of fact, if it comes back down here, I will be looking to make some plays. Moving on to Google right now. Google also continuing its consolidation, 0.28% to the downside. That's okay, guys. Google had a very nice daily uptrend, looking still for the daily higher low. Anything above 183, looking for that daily higher low for the continuation of the uptrend. But be very, very careful here, guys. If the bears take back too much of this move and come too close to 183, could end up with a situation where we get lower high into lower low, daily downtrend, and in for a little bit of weekly consolidation, similar to what we saw on Amazon just now. Good thing for Google, though, the bulls have tons and tons of space here, guys, on this weekly uptrend. Anything above 171, just looking for that weekly higher low for furtherance of the uptrend. If we come down to this level right here, guys, 180, 178, that's where I'm going to be looking to play Google. So far, so good. Been patiently waiting for it to come back here. And if it does, I will be playing it aggressively. All in all, though, no major red flags for that stock either. Now, moving on to Meta. Meta down another 2.7% today. So Meta definitely having some of the worst performance of big tech in the last couple of days, right? Meta in jeopardy of losing this daily uptrend already, right? Big consolidation. And the bears have now put in 100% engulfing move. So suffice to say, guys, that the bulls have almost lost this daily uptrend in complete fashion, right? If we ever break this low on Monday, 493.18 will be a significant loss of the daily uptrend, and it opens the door for the bears to set the lower high, use this all-time high area as resistance, and maybe set a lower low into daily downtrend and send us into further weekly consolidation. We are also dangerously close to our weekly higher lows, same level, 493. So 493 is on watch for next week. Lose that level, Meta will lose the weekly uptrend. It won't be weekly downtrend though. That needs lower high and lower low. So if ever we lose this weekly uptrend, all we need to understand, guys, is just going in for a little bit of monthly consolidation in this gorgeous monthly uptrend and just looking for a monthly higher low, anything above 416, looking for that monthly higher low for further trend continuation. One thing's for sure, guys, if Meta comes down a little bit more, I'll be looking to play maybe some short puts or maybe some put credit spreads, even maybe call debit spreads coming down to this location, 480 down to 460. Keep in mind, they do have earnings Monday, the 29th of July, and I really do think that they're going to smash it out of the park again. Moving on to Microsoft right now. So Microsoft also on team consolidation today. So 0.25% to the downside, and Microsoft also in jeopardy of maybe losing the daily uptrend. The higher low is right here, 446. So gorgeous daily uptrend on Microsoft, but coming very close to the higher lows right now, 446, not that far away. So this opens up the door for the bears to put in a lower high into lower low, and that would send us into a little bit further weekly consolidation. You can see it with this candle formation, guys. Microsoft just might be ready for a little bit further weekly consolidation into next week. As the general market broadens out, big tech might be able to consolidate a little bit more, and that is just healthy rotation. So weekly uptrend, guys, if we do plunge a little bit more, keep an eye on this location right here, 432 prior resistance, going to be newfound support, and the 12 EMA sitting right there as well. 440 to 430 is where I want to be playing Microsoft myself. In the event that we do come down there, guys, I will be making a play for it. Earnings on the 23rd of July. Moving on to Netflix right now. Netflix also continuing its consolidation. Netflix actually one that has indeed lost the daily uptrend, similar to Amazon, right? So daily uptrend was nice right here, and now we lost the lows. So unfortunately, daily uptrend is lost. Not yet a daily downtrend. For that, we would need lower high into lower low. In the event we get that lower high into lower low continuation, guys, just understand that it once again is going to be for a little bit of weekly consolidation, right? So weekly consolidation, keep an eye. Your weekly lows are right here, guys. 624.51. So not that far away for Netflix right now, but at least it's coming into a very big level of support, which is pretty much 633 down to about 605. One thing's for sure, if Netflix does come in to this level right here, guys, I will be playing it. I'm probably going to make a little bit of a play on it for earnings as well. Earnings is next Thursday, so that's why I say price action is going to be a little bit limited, but the one thing that you want to see from the bulls, guys, we need to protect this margin of safety that we have right here. Come too far into this location before earnings, and if ever earnings are bad, guys, it could send us back to these levels down here, right? 571, 550. Definitely would not like to see that, but we have to keep everything, we have to keep all these thoughts front and center, right? In terms of managing risk expectations. So far, the bulls still in light control of the weekly right now, but they have lost the daily. So coming into earnings, guys, it's going to be a very volatile event for Netflix. What I'll probably be looking to play, guys, coming into earnings, maybe some put credit spreads, maybe 3-4 weeks out after earnings, down here in maybe the 590, 580 range. That gives us a very nice margin of error. Now moving on to NVIDIA. NVIDIA also not looking too bad today, 1.44% to the upside, but giving back a lot of the gains in the end of the day, right? So they started a new hourly uptrend, and unfortunately, they lost the lows into the last hour of trade. So if ever we continue this hourly downtrend into Monday, just know that your daily consolidation will simply continue at this point. Anything above 119.27, still looking for the daily higher low for the potential trend continuation. But keep a close eye on the size of this pullback. If the bears pull back too much, guys, it opens the door for lower high into maybe lower low. And then we really need to keep an eye on this last level of support down here, 119 down to about 115. That is your most important weekly levels, because if we lose that, you lose the weekly uptrend and you go into a little bit of monthly consolidation on NVIDIA. So far, not looking too bad. One thing's for sure, guys, if we do come down into this lower area right here, I will be looking to make some plays on NVIDIA. 115 down to about 110 should be a nice little opportunity to be writing some options and getting some juicy premium, because when we come down into here, pretty sure we're going to get a bounce. Even if the bounce does result for lower lows after that, at least we'll be able to benefit from a little bit of a bounce from that region. Moving on to Tesla right now. Tesla doing a great job recovering here today, especially after the disaster that happened yesterday, right? So Tesla actually opened very, very low this morning. Take a look at this. Pre-market open for 232, and then we opened the session and immediately came right down to the pre-market level 232 before mounting an excessively nice rally. Low to high, guys. 8% day to the upside from Tesla. So very, very solid performance from them. Now, keep in mind, guys, we were always targeting this level right here to be our level of support. So nice to see that we came down into here and the bulls reacted perfectly from it, right? What are we still looking for? So daily uptrend is nice. Still looking for the daily higher low, right? Yes, we had a very gorgeous hourly bounce, but they haven't confirmed the hourly uptrend yet. So if ever we lose this hourly uptrend into Monday, just know that once again, we may just consolidate a little bit further. I know this is a big move, but not to say it's definitely possible that Monday and Tuesday, if they are red days, we can just continue sliding down here, and that will still be the same leg of daily consolidation, right? As long as we don't recapture the hourly trend in regular trading hours, we cannot say that the higher lows are set and looking for a leg higher. So far, still looking for daily consolidation. The bottom end of the support range, guys, 227. That is pretty much a very, very big range of previous support. Should be acting as support, and the downtrending channel line will be acting as a little bit of support as well. The 12 EMA has finally caught up with the price too, so that should be looking pretty good. On the weekly, I really don't see any red flags either. Weekly looking very good for a continuation of the trend. If ever we choose to pull back on Tesla for maybe a week or two, just know, guys, there's tons of space. Anything above 167, looking for that weekly higher low for weekly trend continuation. So I will continue to play Tesla regularly and aggressively below 230, right? I'll be looking to play some short puts. The premium on them is very, very good right now, and we can go, 8, 9, 10% below the share price, and even multiple weeks out, 2-3 weeks out. And as soon as Tesla has a little bit of a bounce, a lot of that premium comes out of the contract. We can just swing trade short puts rather than going with long puts or long calls, right? So looking pretty good on Tesla. Moving on to Palantir, our last one. So moving on to Palantir doing very, very nice again, guys. Not losing much in the last couple of days of trading. So daily uptrend is still very, very healthy. Still hunting for the daily higher low, right? Bit of a tightening range here at the top. You can see hourly time frame is just a little bit of a mess right now. So really broad sideways consolidation for the stock. Keep an eye on these lows right here, of course, 27. Lose 27, guys. And of course, unfortunately, at that point, you will have lost the daily uptrend and you'll be in for a little bit of daily consolidation, which leads us into a bit more weekly consolidation as well. Keep an eye on weekly consolidation, guys. Weekly uptrend is beautiful. If we do pull back, looking for some pullbacks into 26 to 25, breakout, retest, and maybe attack the 28 level once again. Another trade that's possible is if we just blast above this 28, then use this 28 as support and then lift off. That could be a nice breakout retest trade. I'm looking for one of the two, guys. Either retest down here, that's going to be one I'm looking for, or breakout, retest, and run. That's the other trade I'm looking for, guys. 28 is so important. Huge resistance from back in 2020 and 2021, but all is looking very, very good on Palantir, guys. No red flags to speak of just yet. That's pretty much everything I had for you guys today in terms of our stock market rundown. I've given you guys a number of swing trades. If you want me to remind you of the swing trades we've been looking at here, guys, we gave these on Wednesday, and so far they've been performing very, very good. Berkshire, we had it down here. Now 10% rally or 5% rally to the upside, looking extremely good for a continuation. Vici, I told you guys, right? Lower $28, $27 range. Now getting a nice pop, looking to reset the daily uptrend, and maybe even looking to set up a weekly trend shift pattern in motion, looking very, very good. All your interest rate sensitive stocks have been coming back decently, right? We looked at Enphase, one of the more riskier trades from the lower levels. Enphase looking very, very good, maybe going to start retesting some of these higher levels. So the trade down here was very good. I still like it for a little bit of continuation, only if we get a little bit of a pullback down here, 110 for a little bit of a run. That could be a trade setup that I'm looking for myself. Visa and MasterCard gave you guys these all week pretty much. And now Visa and MasterCard finally starting to come back a little bit more. So hopefully you guys were able to buy the dips. Still very, very juicy dip opportunities on those. McDonald's is another one that's kind of been out of touch or out of love with the markets recently, looking pretty good for a little bit of a swing trade attempt to the upside. Solid company once again. Louis Vuitton, we saw it down here once again, guys, in my mid 150 range. I love buying the stock down here. Once again, looking for the potential weekly trend recapture by the bulls eventually. Such a solid company, looking for the continuation of the monthly trend expansion. Another one we were looking at after earnings as well was Pepsi. Pepsi's earnings, we went over them on the channel yesterday. Decent earnings, solid company, right? Looking for the continuation of the daily trend expansion. Lower 160s for Pepsi, guys. I'm a big, big, big fan if ever we re-see those levels again. Another one was Intuit, right? Intuit, such a solid company. Had a little bit of a dip down here. What we were looking for here, guys, Intuit looking for the weekly trend recapture. This is a cup and handle on the weekly, guys. Such a gorgeous pattern for continuation, so keep an eye on Intuit as well. AbbVie was another one I brought up earlier on in the video, looking for the weekly trend recapture once again too. Uber was another one. Uber, we had it down here. Suffice to say that now the stock has rallied a lot, so hopefully you guys are able to pick the lows on these. All these same plays, guys, we just keep bringing up the exact same plays over and over and over, plus all the ones that I show you guys in my portfolio, right? So speaking of portfolios, let's go have a look at portfolios. Ooh, and another one, guys, Airbnb, even though they have earnings coming up shortly, Airbnb could be a really nice one, as a matter of fact, as it comes down into this lower level right here, 143, 140, looking for the continuation pretty much of this juicy monthly uptrend. Beautiful area of long-term support for the bulls. So let's get into my portfolio right now, and we're going to do a quick recap of all the trades. All right, guys, so taking a look at the performance here on the portfolio, you can see that now we are up 23.81% year to date. It's been a relatively good week for us in spite of the volatility, and we are beating the S&P 500 by a nice 6+% right now. So looking very good. We've had a very rocky start to the year, right? A lot of misperformance here in the month of January as we got stuck in a lot of consumer discretionary stocks and also stocks exposed to China, such as Alibaba. We had to hold the bag on those for a while, and then eventually we're able to get out of those at a profit. And then we were just running the regular wheel strategy. Now, we did take a few more risky plays last earnings cycle, guys, which cost us a lot of money, right? Suffice to say, we got trapped in CRM, in Nike and Starbucks, and that is despite being very, very risk averse on those trades. We still got caught on them. Nike, Starbucks, and CRM having their worst single day declines in 15, 20 years each. And we got screwed on every single one of those plays, guys. And even despite that, we are still outperforming the benchmark, and that is without holding any of the big tech names that have ran a ton this year, especially NVIDIA, which has contributed near 30% of the entire S&P performance this year. We have not held a single one of those stocks, and we're still beating the index just with the trading strategy. So this year is definitely an outlier in terms of S&P performance, just because of how much impact big tech has had on that, right? If you don't have big tech in your portfolio, you're probably underperforming the indexes. So nice to see us outperform the indexes, even with all those mishaps, and not holding any NVIDIA or any chip stocks or any of the big tech names, just swing trading and sticking to our majority strategy that we run here in terms of selling options premium. So looking pretty good, guys. Pretty decent performance today. Obviously, we could have done a little bit better if we didn't get, absolutely reamed by Starbucks, Nike, and CRM during that last quarter, but that's fine, guys, right? The purpose of this account is just to show you guys that even if we take losses, guys, the important part is to stick to the strategy, move on to the next trade, take the loss, and just move on, right? Now, looking at the positions that we're holding over the next week, you will see that I did close a number of them, especially some swing trades yesterday. So we closed Intuit, we closed Mercado Libre with very, very nice gains across the whole. I think we made about, about 3% on Intuit in just 2 days. It wasn't that large of a position, but still a decent win. Mercado Libre as well. Mercado Libre, we were up pretty much almost 10% on those shares in only about 4 or 5 days of trading. So I had to take the gains there. And I did cut a number of other things. Well, not cut, we just get called away, right? So Square has also exited the portfolio. I had covered calls leading into today. I pretty much just sold the covered calls and sold the shares at the same time. They would have been called away at the end of the day anyways. Right? So pretty much just front ran myself on that. So we did close Square total profits here, guys. We pretty much, our average cost on Square with all premium received was right under $63, about $62.95. And we just sold them today, pretty much around the $68 mark. So looking fairly good. We did have some covered calls that kind of ran against us there. Total profits on Square for the time we held is roughly about $550. So fairly decent time that we had in Square. We got a great position and great management by myself, if I have to say so myself. So those are the ones that aren't figuring here that you may be curious where they are. Those were closed. So what positions are we still holding into the next week of trading? Well, we still have those AMD calls. I still have those as well. We still have the Amazon Leap calls that are covered right now. So we'll keep track on Amazon's decline. And when I do think that Amazon's decline is starting to get, you know, a little bit bottoming out, that is when I'm going to close these covered calls and we're just going to ride the Leap call. Same thing on CRM, same strategy. We have the Leap calls down here on CRM, which we're up very decently on right now. And so we covered them, right? So now the covered calls are in profit. So same thing. When I believe that CRM is ready to have another rally to the upside, and I think it's getting close to it right now, I'm just going to close these and just keep the long-term Leaps on board. So that's pretty much everything for them. Still have that little Bitcoin trade, only about $500 trade, right? So nothing truly big about it, but just to show you guys, when you pick decent levels, we're already up 6% on those. Those are 2 times leverage. We also have a few trades on CLH, right? So CLH, well, you guys know what I did a couple days ago. I already told you about it. Leap call on CLH. These are the March $40 calls. We're up nicely on those. We also have the September $75 calls. We're up on those as well. CMG, so Chipotle, we actually got assigned on Chipotle today. We had the 58.2 puts, which we got for 32 cents. We were assigned on those because Chipotle, unfortunately for them, not for us, because I love this stock, we closed under 58.2. So we are the happy recipient of 100 Chipotle shares. Now, what I did is I jumped the gun on covered calls right away just to get that theta decay over the weekend in the event that Monday opens up a little bit red for Chipotle as well. We got 70 cents on the covered calls. So total premium collected so far is about $1. So our average cost now is 57.2. So looking pretty good on Chipotle. I really still love Chipotle in these lower levels right here. Just a matter of time before that stock really starts turning around. They've just been, you know, having poor performance from their split. That's to be expected, guys. Historically, companies after splits never really do tremendously. They usually go down for 2, 3, 4 weeks and then just resume course as the Wall Street pretty much just traps everybody in options, and then it allows the stock to run thereafter. Now, moving on, guys. So we also have Chipotle September 20th, $62 calls, just banking on that recovery story for Chipotle once again. And moving on, guys, we still have the EVVTY, so Evolution AB, one of my favorite casino and gambling plays in the market right now. Still going to hold this one. We got in at about 104, and I really want at least 120 for this before I get out of the position, guys. Not too big of a position, 30 shares only, about 3,300 in capital right now. We're up 6.66% on that one, looking like a good swing trade right there as well. And then we still have a few bull put credit spreads, right? So we have the MasterCard 440s versus the 435s. Still a decent amount of time on these, August the 2nd, so we'll see how those goes. Meta, we have 2 of them, and Meta is coming close into these ranges, right? These ones are already pretty much in the money. We'll hold them still a decent amount of time, August the 2nd on those, and August the 2nd on the 490s versus 485s too. So we'll see what happens with these guys. I'm still happy with these levels on Meta. Still have the Nike call for pretty much October 18th, so a decent amount of time on these still for Nike to make a little bit of a rally. We are down, however, we paid $3.30 for the calls, and now we're down about $100 on those. Pepsi, bull put credit spread, that is pretty much worthless today. 21 cents in credit for it, and pretty much called away after their earnings, so looking very, very good. SoFi's had a tremendous rally so far, so what we did is we wrote these $7 covered calls for August the 2nd. We got 49 cents on them, so looking very, very juicy, guys, right? 49 cents, that's 7% return for the next 3.5 weeks of trading, let's call it, right? Very, very decent ROI for these. So looking forward to see how SoFi does on their earnings call coming up pretty much this same week, right? If they blast off, that's okay. I have 2 call positions right here. You can see we bought these. These are Leaps, right? March 21st, $4 calls. We got them for $2.96, $296 each. They're now worth $328 each. So we're up nicely about 12% on that position too. And then we have a bunch of Tesla trades that pretty much expired worthless. I was trading in and out of Tesla pretty much all day yesterday and today. Suffice to say that yesterday and today we took a little bit of a loss on Tesla on the 250 short puts that we had. We closed them for a loss, even though I had covered them with in the money covered calls at the same time. We took a little bit of a loss on Tesla, but we wrote a bunch of them, guys. I could go through the positions, but there's like 5, 6 of them. All in all, this week on Tesla, guys, we made about $600 with the loss included in that. So pretty good here, right here. You can see 245 put. This was a mistake. This was supposed to be a short put. I actually had another one that I closed. So this was supposed to be a short put. I guess I clicked long on the broker terminal. So unfortunately, guys, we had to lose 18 bucks there. These two kind of offset each other. Anyways, short form, I'll continue to play Tesla relatively aggressively each and every day. We have the 227.5 short puts for next Friday. Decent margin of error, guys, about a 9% drawdown there. We got about $1.32, so just over 0.5% for these contracts with 9% of margin of safety. And Visa has actually called away this week, freeing up some buying power. 100 shares of Visa, average cost was about $264.56. We had the 262.5, so in the money calls, not even at my strike. We got $456 for them. So we're probably gonna make what, like 150 bucks on Visa, holding it for 2 weeks. Not the best. I was a little bit too cautious on this one, but still, profit is profit. And what it's going to allow us to do is free up $26,500 in buying power for those for next week. I want to play a lot of the earnings next week. And Vici performing exactly as we said it would be. Guys, up a nice about 5-6% on Vici. So all in all, very good week of trading for us, guys. As you can see, the portfolio was pretty much just straight trade up all week, just farming premium. Yes, I lost a few trades here and there on long calls or long puts, stuff like that. However, as a whole, the account has been going to the upside. So very nice. And now we have a lot of buying power for next week earnings, which is exactly what I wanted to. I wanted to get out from as many positions as I possibly could, or at least cover up a lot of the positions that I'm holding. So that way we pretty much cap our profits. We're not giving anything back to these markets. And now we have a lot of buying power next week for earnings. So hopefully that was helpful, guys. That's pretty much everything I had for you guys today. If you enjoyed it, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We do these videos every Monday to Friday after the close, so hope to see you back in the near future in another one. And lastly, guys, if you have any questions at all, I'm sorry. I know there's been a ton of questions recently. I've been very busy. I will answer all of them tonight, so leave it down below in the comments if you have any questions. Stock, technical analysis. I'm doing the subscriber request video tomorrow for all of your tickers, and any macro discussion or option discussion, whatever you want, guys, down below in the comments, and I'll be happy to answer you. So take care. See you tomorrow in our subscriber request ticker video, and peace.